Hey guys, it's Ali and Julian here again at Personal Finance Boss, and we are back with our cryptocurrency blockchain episode part two.
Part two,
Part two
yes.
this time. We spoke about cryptos last time, what they are, what they do, Bitcoin, Ethereum, Litecoin, to name a few. Just to give you guys a heads up, it's what 2:20 in Montreal Thursday afternoon. What day? We are the 14th of September, and the price of Bitcoin now is 3,300 US
Yeah,
dollars
it dropped about 14% in the last day.
in the last day, and I
Yeah.
think it was close. It was close to 5,000 US at the beginning of the month. So just to give you guys a little perspective there.
Yeah, on the volatility of investing cryptocurrency.
Yeah, so dropped to below 66% in the month from five now to down to about three.
No,
So
but
just
that was 5,000 USD.
yeah, isn't that?
Oh yeah, right,
That is
right,
USD.
Right, yeah.
So 3,300, so a little north of 60%. So just to give you guys the volatility,
Really?
reason, yeah,
You sure you're doing that mental math? Isn't it 40%?
2/3,
Isn't it
2/5,
40% drop?
40% drop,
Uh,
40% drop, close to a 40% drop. Sorry, but that's still a lot for
yeah, okay.
like 2
for
weeks.
a month or whatever. Yeah.
Exactly. So reason why that happened: China banned crypto trading
Okay.
in country, so 1.3 billion people now cannot buy crypto legally.
Okay.
But they'll always find ways around it. And Jamie Dimon of JP Morgan said that cryptos are so-called a fraud.
Yeah, and he would fire any one of his traders that
That
actually
traded
invests
it, yeah.
in
Which was
really
funny though. He said his daughter actually bought cryptocurrency
Oh,
and then
man.
it went up, and she was telling her dad like, "Yo, I made some money," and I was just like, "That guy makes so much money in a year, just like here." But yeah, so turn of events, and it just goes to show you that things like that, JP Morgan CEO talking out, China banning them, has such a big impact on the price of cryptocurrency.
Yeah.
So just to give you guys heads up about the volatility, if you didn't know already, what we did want to talk about today is there's two parts to cryptocurrency. One is the currency itself, so Bitcoin, for example. The second thing, though, is the underlying software and algorithm it runs on, which is blockchain.
Yeah. So you actually read a book, or you're reading a book.
I'm
on it,
reading
so
a
you can
book on
enlighten us.
blockchain,
You can enlighten
on the
us.
blockchain revolution.
Yeah.
So basically, in my personal opinion, I don't know where crypto is going to go. I did buy a small position of like $200 on Monday in Litecoin and Ethereum just to test the waters, see what's out there, and just so in 20 years time, if ever crypto is the biggest thing out there, I can say I was in the game. I got in the game. I wasn't stupid like in the 90s when no one invested in tech. But I think that cryptos, I don't know where the market is. I don't know if it ever is going to replace fiat currency. That's the whole goal, to become a decentralized currency, because a lot of people that are Bitcoin aficionados or enthusiasts are saying right now, they just print money,
Yeah.
the value goes down, and then
And fiat currency meaning the currency of every
the
day.
paper
so
money,
CAD,
legal
you know,
tender,
yeah, so USD, Canadian dollars, and so on and so
British
forth.
pounds, wherever you're watching from, the currency that you guys use, the legal tender that's backed by the government, they want to remove that. And the Bitcoin supply, like Julian said last time, is capped at 21 million
Yeah.
Bitcoins. That's not expected to be reached until 2140. So we still have a bit of time to go. Well, a lot of time to go. And the reason why it's going to be capped at 21 million, and that's hopefully going to limit inflation. The prices, yeah, it's going to limit. It's
Yeah.
going to limit inflation, and just the value of each Bitcoin is going to be.
Yeah, and
It's
I
gonna
think
go
people
up.
are also going to feel more comfortable using it since they know that central banks can't just print more money out of thin air
Exactly.
to control the monetary policy. So it's more of it's kind of like a gold standard type approach, meaning there's only a fixed amount of gold there is.
Mm-hmm.
And it's funny because the rate at which we mine Bitcoin is supposed to be similar to the rate at which we mine actual gold. So that's kind of what they
Really?
were trying. Yeah, that's what they were trying to do. I'm not sure how they calculated that because the value of Bitcoin and gold changes all the time.
Uh-huh.
But that's like the intention behind the mining is that you can't just print money when you please. It's more you need to work for it, and it gets released at a certain rate,
Yeah.
which we'll talk about when we get to the mining part. But now we're back to the blockchain part.
So the blockchain.
Yeah.
So the blockchain's underlying algorithm.
Okay.
It operates on a peer-to-peer network. So
Which means
peer-to-peer from me to you.
yeah, there's
So
no
person to
it's no
person.
like from me to some server and server to Ali. It's just
Yeah.
from me to Ali directly.
Exactly.
Kind of like Skype.
Yeah. And it's going to be a decentralized system, so no backing authority, no overlook watchdog, if
Yeah.
you will, watching over transactions. The entire system, basically through mining process, which we're going to talk about later, it's going to verify the nature of the transactions or verify the information we're putting on. Everyone is going to have personal access keys, so you get to choose basically what kind of information you want to store on the blockchain. So you could store your passport, for example, on the blockchain, but you would choose, for example, when you sign up for a legal thing that require a legal service, that you need to be over 21. You could just tell the service, okay, for example, I just need to tell them my name and my age. They don't need to know my address. And the example they gave in the book, actually, and the site I was reading was, for example, if you go to a bar, you go to a casino, or any place that requires you to be over 21, and you hand them your license or you hand them your Medicare card, the only thing they need to know is your picture, so it's not a fake ID, and your name and your birth date. The other stuff on it, your address, your height, your eye color, they don't need to know that, but they're still seeing it. So they're saying nowadays there's so much information and we're giving out so much information to consumers, to retailers, and there's no need for that kind of divulsion. There's no need to divulge that privacy. So with the blockchain, with your private key and be able to create private passcodes and everything, you could choose who you want to give it. And basically how the blockchain works, so think of blocks and chains. Every 10 minutes, there's transactions that happen, there's information that happens. Those are all stored within one block, so a 10-minute block. Those transactions are then verified by the mining process and the algorithm that runs it. And then when the system says, okay, it's good, that attaches to the blockchain and it forms this public ledger.
Now, by public ledger, what does that mean exactly?
It's accessible to everyone. So everyone that uses the blockchain can see it. But like I said, with the private access keys, there's ways to say that, okay, only these people are allowed to access this unit. And I think you are able to create like multiple blockchains, so you're not just have one. So like companies could have their internal and external one. And so. So like the external one you could show to shareholders. The internal one. So the reason why I say blockchain over crypto is I think that blockchain has a lot more implications than cryptocurrency has.
I mean, it could be used in much more applications, and it's a much more sure thing because it's a technological advancement, kind of like the internet was. It's not so much a cryptocurrency that may not be around in a month from now. It's more of, due to cryptocurrency, the blockchain was invented, right?
Yes.
And thanks to this advancement technology, which is much more efficient, we may start seeing blockchain applied like on stock markets. Right? We were talking earlier about how
it's applied on the NASDAQ
medical
already.
records on blockchain. So we can do a lot of different things using the blockchain, and this is just a much more efficient way to store data.
It's already on the NASDAQ. They already started putting it in for like the smaller transactions. CEO of NASDAQ actually put it in, and he's testing with some of them. So that's going to be something interesting to see. So the best way that Julian loves to learn is learning through examples.
Of course.
So I will give you a few examples. And basically, like the internet in the 90s, the best way I can explain it, it integrated into our work. It made the way we work different. But it didn't change the way we work. We were still inputting data. We were still emailing people. We were still calling people. We were still notifying people, still verifying transactions, verifying information. Now, though, this is going to change the way we work. So for example, the easiest application that everyone can see with blockchain is on a transactional nature. So right now the options, if I want to send money to Julian, if we're at the same bank, I could use a bank transfer. I could use Interact e-transfer. I could use PayPal, or I could use a wire transfer. Three of those four, except the bank one, if I were at the same bank, I have to pay for. So Interact e-transfer I have to pay for, wire transfer I have to pay for. Western Union transfer and PayPal has their own fees. So those all have fees, and the bank transfer takes 2 business days. With the blockchain, though, it would take 10 minutes, and it would be free. So, and eliminating all 4 intermediaries. So bye-bye. So that's the biggest implication. And if I were the banks, I'd be super worried because all those transactions, all those natures, all those withdrawal fees, all
banks
of that.
Live off fees. So if we kill the middlemen and 90% of the financial transactions, what's left for them?
There's nothing left for them. So it's going to be interesting to see. And if we take that further with something like medical records right now, where if you did a blood test and then you need to send it back to a specialist, or you need to send it to multiple specialists, that takes so much time. Imagine if that information was stored on one centralized service, and you could just tell your rheumatologist, your endocrinologist, and your oncologist, for example, this is my medical file, go and access it here.
Yeah.
And imagine we're saving a week, probably, of just emailing that to other people.
And the paperwork.
We're eliminating the paperwork. We're eliminating that huge file cabinet.
Yeah.
That's pretty good.
Yeah.
But then again, we're eliminating so many of these services. Filing cabinet people. I know. It's like Staples is already struggling, and now we're gonna yank this from them too. So it just goes to show so many of the different implications, and I could go on and on about different implications, but I've just gotten this far into the book.
So then, how does that affect us as a consumer, an everyday consumer?
As an everyday consumer, well, it would for sure it would make it cheaper, I think. In terms of that transactional nature, it would facilitate a lot of transactions and your efficiency and your time.
Okay.
And your time would save up, and everything would be stored right there. Everything would be there. Your passport, your medical records, all your files, all your investments. It would just be accessible in one centralized, decentralized location. So I've been looking into the security, but because of its encryption protocol and encrypted with cryptography, it is very hard to break. And it's Bitcoin, the network Bitcoin ran on was meant to be, it's built in a way that it's unbreakable. And no one has been able to break it so far. However, with the rise in the usage, there might be flaws, but I'm not too sure about that, so don't take my word on that. But I would have to do more research about it, because if we're looking today with the rise, like Equifax got hacked yesterday.
Oh yeah, okay.
Equifax.
Again?
Yeah.
Didn't one of these guys get hacked not that long ago?
I don't know if it was a credit bureau, but Equifax, huge credit score, all your SIN, your social security number, everything is on that. All your investments, and that got hacked.
Yeah.
And Target got hacked 2 years ago. Home Depot got hacked. All of your credit card information, all of these are going to hackers, to everyone. So if they've been able to get into Equifax, which should have the best security in the world, they should.
Yeah.
It shouldn't. It's not supposed to happen. It's like if Google got hacked tomorrow.
Yeah.
Think of all the information you store in your Google account, your emails, your addresses, your contacts, all of that. Your on Facebook, like for ads, we have to store your credit card info. All of that's gone. Or on Amazon, for example, all of that's gone. All of that's exposed. So it's going to be interesting to see on blockchain.
And the question is there really a safe place on the internet? Does that exist? Can you actually create a safe place on the internet? Because in the last episode we talked about how a group of people stole Bitcoin from an exchange, right? Because it wasn't properly secured, and I think the person was charged criminally, the person that created the platform. But is there really a safe place on the internet to store all your would people want to store all their stuff in blockchain? I don't know.
It would be a huge change. For sure, especially just adopting blockchain.
Yeah.
Like think of the internet, how people still struggle with it.
Yeah.
Just basic tasks.
So it won't happen from today to tomorrow, but as investors, you can maybe look into, like I was saying earlier, the companies that work with the blockchain, that develop blockchain, that implement blockchain, that offer services with blockchain. Like you said earlier, that Deloitte was looking to create
an
consulting group.
Yeah.
That would help integrate blockchain, because blockchain would essentially kill all of the auditing process that they do, and that's a huge chunk of their revenue.
Yep.
So companies like that are kind of
Deloitte's private, but
no, but I mean not saying that. Yeah, but like companies that are not forward-looking, but like looking ahead and trying to adjust their business strategy to accommodate blockchain. Those are companies that you may want to invest in. But then again, it's not as volatile as investing in crypto, because it's actually technology that is very useful. But then again, it is new technology, so we don't know, if it gets hacked one day and we find some huge security flaw, maybe, it's going to slow the
or if it's never adopted.
Yeah, that too. Because it's kind of like Uber and taxis. Taxi drivers fighting against Uber because it's a better way. People prefer it, but they spent so much money on their license or their medallions that they didn't want Uber to come on. So maybe banks and governments would be putting so much pressure against Bitcoin and blockchain because it would just mess up the system so hard. So we don't know how people are going to react to the adoption of such new radical technology.
And the regulations will have to change completely.
Yeah, exactly.
They'll have to be like with Uber. The regulations are still coming into play. But then again, with the drivers, with the pricing, with the surge pricing, none of that is controlled.
Yeah.
And I think with any system, when anything new, like banks at the beginning, when they were created, all those ATMs and stuff weren't there in 1980s. They only started popping up recently, opening on Sundays. But it was only up till recently that all those transaction fees really started, that we started noticing.
Yeah.
Like withdrawal fees, those Interac e-transfers. Before, those were all free. Even with Tangerine.
Really?
They were all free.
Email money transfer free at big banks?
At one point, they were free. And then they started upping the fees.
Yeah.
They're like, before there were no withdrawal fees.
And it's funny because when you deposit a check, it says transaction fee free. I'm just waiting for the day that they're going to start saying 50 cents there.
Exactly.
Like,
so
I'm sure
it's gotten absurd. Like you're paying me to deposit money.
Yeah.
How?
Yeah.
And then they pay you shit interest on it. which was curious with crypto. One of the things I wanted to ask is right now we store our cash at banks.
What are you asking?
I'm just like a general hypothetical question. When you deposit cash in banks, that's Julian's cat. He wants to hop up. But they give you interest. So in the case of crypto, if you deposit on the blockchain, like it's stored in a wallet, would they pay you interest on it?
But it's more like if you buy currency, like if you have Canadian dollars and you exchange it to US dollars, they don't pay you, like the exchange doesn't pay you money.
No, what I'm saying, let's
because
say...
now you can't look at crypto as like an investment. It's more of a currency. So it's more, now you'd be like an FX trader, a currency trader. You wouldn't be trading stocks.
Let's say that there was no fiat currency.
Okay.
And we've changed to Bitcoin.
Then banks would probably create, like TD may say, okay, we're creating our own Bitcoin wallet thing and deposit Bitcoin in our wallet. We're going to pay you 25%, and then they're going to start lending that money out for people to buy homes with. So essentially the same thing that they do with fiat currency, they may be able to do with cryptocurrency, just the way that banks lever up. And to lever up, they need to have money in their coffers. So they incentivize us to give them money with GICs and like saving accounts to kind of lock the money in, so they can then lend the money out. So maybe we would see something similar with that.
GICs with Bitcoin would be cool. You'd lock up something that doesn't increase
in value. But then that's risky because the currency moves so much that if they pay you 2% interest and then the currency loses half the value, you couldn't guarantee the investment. I don't think they can guarantee it.
That's something cool to start, a Bitcoin GIC.
Yeah, you want to lose money, you start a Bitcoin
No,
GIC.
but you guarantee the number of Bitcoins. You wouldn't guarantee the value.
Yeah, I guess. Yeah,
you guarantee the 0.02 Bitcoins that I bought on Monday.
Yeah, I bought 4 cents of Bitcoin, 0.04. Good times. Anyway, now I think we should move on to Bitcoin mining, right? Yeah? Which is, I guess, the more interesting part for us listeners.
Do you want to break it in another episode? Because we're already at 20 minutes.
No, we can just do one of that. We're fine. So, what is, like, Bitcoin mining essentially is the process of, you say, adding transactions to the blockchain, right? And then the people that do that get rewarded, right, financially in Bitcoin or in
Ether.
Yeah, whatever crypto that you're mining, I guess. So, the way Bitcoin works, did a bit of research, have my notes, but every 4 years, the amount that gets released every 10 minutes is halved. Or every 2,100 blocks, and you get 1 block per minute. So, 10 minutes. So every 10 minutes, there's a block of transactions that need to get verified, and this gets verified by computing power all around the world. So if you wanted to, you can go ahead and mine Bitcoin. You go on, if you have like a gaming computer or something with a graphics card, you can install a program and start mining Bitcoin. And we'll get into the technicalities of how you mine Bitcoin later, but essentially, you verify all the transactions, and once they're verified, the last computer to verify the last line, right? Or was that what it was?
The last one to like solve
the math problem. Yeah, because every block is encrypted, and to add it, you need to unencrypt it or solve the math problem essentially, and add that to the blockchain. And the last computer that solves the last line, you said, right? Yeah,
the last one that like solves a math problem that links that new block of transactions with the whole ledger gets the reward. So right now in 2017, we're at 1250 Bitcoin per whatever 10 minutes. And that came down. It was 25 in 2016. That came down, and then they're anticipating now it's going to go to.
Well, it's halved.
It's going to halve in 2020. Is the next point where they're anticipating.
No, it started in 2009. No.
Yeah,
it's 2009. So 4 years later, it went down to the next half. So that would 2013. So in 2018, no, 2017.
They said in 2016 it went down last.
Okay.
So in 2020.
Look at when it started exactly, but it's not super important. So you get paid that way, and then you can also get a certain amount from the fees that people paid sending money around. So there's certain fees that you need to pay, even though there's much less in banks. So that's another way that people can get money. And since the amount is halved every time, when like you'll be getting 4 Bitcoin per block that you solve, the fees are going to have to compensate the miners for the cost of computer, the cost of electricity, because it's very costly. We watched a YouTube video of some guy in the States who had a warehouse full of rigs or computers all hooked up together, mostly graphics cards, just hooked up together, mining Bitcoin, like a custom-made system mining Bitcoin. It must cost him, $50,000 a month in electricity, but apparently he's making a lot of money doing that, right? So it could be pretty interesting for if you were to do something large scale. And since depending on the amount of computers that are solving the problems, the algorithm needs to make the math problem harder or easier, right? It's kind of like supply and demand. If the supply is high, if the computing power is really high, because a lot of people are getting onto it, then every 2 weeks or every 210 blocks, the algorithm makes the math problems harder to adjust to the amount of computing power, just to kind of make things fair. So did I kind of hit all the points there for mining quickly, right?
Are you talking about the mining pool now?
Yeah, we're going to get to that. Like, how do we as individuals make money? But just to explain the overall process, that's pretty much what it is. So
so pretty much every 10 minutes, huge block of transactions. Those all need to be verified. Once those are verified, it needs to join to the block, essentially a big math problem, how to join it to the block based on verifying transactions. Mining pools, which Julian will explain, they're hashing it out, trying to solve it. Whoever solves the problem and joins it gets the
reward. A mining pool is kind of like a lottery pool. Is that what you call them? Yeah. Like people that buy lottery together. It's just that if you're alone trying to solve this math problem with your one computer, the odds of you solving, the final string is so small that it may take you years
and costly.
Yeah, we can't say hydro because it's not electricity. It's going to cost you a bunch in electricity. Every year the payout's going to be zero until you solve that last thing. So what people do is they join pools where I guess they prorate the amount of computing power that you bring to the table. So if you have one, shitty laptop, you get 0.00 whatever percent of the pool of the payout. So when your pool solves the problem and you get the payout, then it gets split amongst the participants of the pool. And then the person that organizes the pool charges like a 3% commission fee or whatever to justify his work. So
like a supervisor.
Yeah, exactly. It's like a bank when I was charging a little commission there just to make a little money. So essentially, what you need to start Bitcoin mining, is you need to install a program that mines Bitcoin. So there's just Google some, and there's a bunch online. You need a computer, and for Bitcoin mining, it's not the CPU or the processor that needs to be the most powerful. It's really the graphics card or the GPU, graphics processing unit, that needs to be powerful, because that's, I guess, optimized for Bitcoin mining and solving math problems and algorithms. So if you have a gaming computer, then you're in business. If you just have like a workstation that you use at work, then it wouldn't be efficient to mine Bitcoin on that.
And it will slow down your computer too, right?
Oh, of course.
Yeah.
Like if you're mining Bitcoin, you can maybe browse the internet, but if you're trying to do like something that demands more power, then it's going to be really slow, because it's essentially using all the power in your computer to solve these math problems.
Yeah.
So you can have a dedicated rig, as they call it, to solve this, but then it's expensive. Like a good one may cost you $2,000 to $3,000.
Find the excuse to buy another laptop.
Yeah, exactly. No, you don't do it on a laptop, obviously. Do it on a desktop, but find an excuse to upgrade your desktop. It's to mine Bitcoin. Yeah.
That's also why NVIDIA and advanced micro devices stock has taken off in the last year.
Yeah,
people are buying
reasons, but
buying GPUs for Bitcoin mining.
Yeah, no, it's good for those companies. So can you really make money mining Bitcoin? Well, I guess it kind of depends on how lucky you are. If your pool solves the problem and how much you pay in hydroelectricity. Yeah. And also the price of the price of Bitcoin. No, the price of Bitcoin. If Bitcoin is worth $3,000 today, and it's worth $1,500 in a week from now, then it's obviously less profitable, because essentially, if you want to get paid mining Bitcoin, you're going to be converting your Bitcoin into USD, CAD, or whatever currency your local currency is. So it really depends on the value of Bitcoin. If Bitcoin goes up to $100,000, then it'll become much more interesting. But then more people will be joining, So then you'll make
and the mining rate is going down.
Yeah, on top of it. So it's halved every 4 years, and more people will be joining on. So it's essentially splitting the bounty up even more. So then again, is it really profitable? Now that's up to you guys to analyze, and if you get lucky, then great. It's like winning the lottery. But there's no it's profitable in these countries and not in those countries. It really depends on many things, and since the price of Bitcoin changes so much, it's hard for us to say. But it could be interesting if you have the necessary hardware. Why not try it? It's free to set up, and it's just going to cost you a bit of hydroelectricity, a bit of electricity. So yeah, it's because in Quebec most of our electricity is generated by water. That's why. So yeah, that's about what we had to say on Bitcoin, right? I mean, Bitcoin mining. Anything else?
I think you got it.
Yeah, and also to add, one of the programs that I was looking up, it would mine the most profitable currency. So if on this day Ethereum is more profitable than Bitcoin, it would start mining Ethereum just to try to increase your ROI.
Oh, that's pretty good.
Yeah.
And we talk about Bitcoin, it's just because Bitcoin is
it's the most popular one.
It's the most popular one, but you could mine Ethereum, Litecoin.
Yeah,
you could mine those. And
apparently the most popular one is for mining is Ethereum. Apparently, I didn't Google why exactly, but
Ethereum, basically the owner of Ethereum.
Yeah.
His is more. The Ether is just like the currency used, but his more focuses on the underlying algorithm.
Okay.
Like his objective is to employ the algorithm.
Yeah.
And because you employ the algorithm, you have access to Ether. Bitcoin, though, is we want to use Bitcoin.
Yeah.
Like we just have the blockchain because that's what it runs on.
Yeah.
So it's kind of a difference of opinions there.
Okay.
And that's where those two guys don't like. But it's a young guy who runs Ether. I think he's like 24 or something. But he's like super young, super smart.
Good for him. Good for him. And here we are.
Here we are doing a podcast about that.
Yeah.
But yeah.
So yeah, I guess that's what we had to say in the second.
Maybe he's listening. He'll give us some Ether.
Imagine. Good PR for Ether. What's our next episode on crypto going to be?
Maybe like tying everything up. I'll read more in my book and see if we find something. We'll do some more research. Julian has a computer lying around, so we might try
I may
some hashing or something just to see what it's about.
And talk about my experience doing it. So yeah. Anyways, guys, thanks for listening to part 2, cryptocurrency. I'm going to try and release a podcast this week about a completely unrelated topic, just to change things up a bit. But other than that, you guys can get a hold of us as usual on our Facebook page, by email, message us on Facebook. What else? Yeah, we have to.
Mostly commenting on SoundCloud, we'll get on that too.
Yeah.
Or on YouTube.
Oh yeah, that's true. Yeah, we post these videos on YouTube, so you guys can go have a look. And yeah, thanks for tuning in.